Hi everyone and welcome to Price Action Trading School. Today, Wednesday, and we continue with our Price Action Trading School. And before we delve into fundamental analysis and technical analysis, we will talk about best time to stay out of markets. And next session is where we actually begin with talking about fundamental analysis and technical analysis, and there we will be learning technical principles to for successful trading of price action. As you know, guys, my name is Nenad, and Chris and I are running our website. It's Elliott CurrenSea, and also we are having our mutual company together with our friend who is doing marketing for us, and you're always welcome to join our sessions. Price Action Trading School is a free session, and you will be able to learn everything for free. And by the end of Price Action Trading School, there will be some requirements for you just to actually get a template for price action trading. And of course, it will be for free, but I need to make sure that you will understand every single principle that I've been talking in Price Action Trading School. So very important for you if you want to be a profitable trader, if you want to trade with profits, then come here, listen to what I have to say, and definitely you will be happy. You can also follow our MyFX book accounts. We are also trading. We have our live channel on Telegram, ECS Live. And for some small subscription, you can always trade with us. And you can always check, of course, the latest results on my FX book. My name on my FX book is Tarantula FX, so feel free to browse through my portfolio. Okay, so we continue with our session. Miguel, Robin, and Ali are saying hi. Ali is saying zdravo. Pozdrav, Ali. So hi to you also. And today is session number 7. So best time to stay out of markets. Why? Because it's important for you to know sometimes not having a position in the market equals to having a profitable position. So sometimes it's extremely, guys, important to stay out of markets, not trading, because sometimes if you trade too much or you're trading excessively, that can definitely bring unexpected drawdown and unexpected results. So today, best time to stay out of markets, and we can continue. So first of all, Price Action Trading School has 4 pillars. It's price action trading, risk management, trading psychology, and market analysis. When each of these principles is respected, your results should be excellent, okay? Or at least you should be profitable. That is the point of trading, to be profitable. So there are a couple of things, guys. I will be, as always, straight to the point. There are a couple of things you need to know when trading. So it's important to know, we already covered it, trading sessions, when it's a good time to trade, which pairs to trade. We already covered on previous Price Action Trading School lessons. If you still don't know what I'm talking about, you can always visit our YouTube channel and find previous lessons there. So when to stay out of markets, there are very different things when it comes to when to stay out. And I will be naming most of them and the most important of them, so you should know always when not to trade. It concerns intraday volatility, okay? Then midnight open, Wellington session, Ema Spiral, US and European Union bank holidays, then certain summer period, New Year, and important pressers. For all of you who don't know the word presser, it's actually a press conference. So these are definitely best times not to trade and to stay out of markets. Why it's important? Because each time you make a position in an inadequate time, when the time is not proper, you might end up losing your position instead of making profits. I will be covering all of this now, guys, step by step. So pay attention. And of course, if you want to see this webinar again, feel free to do it, because this webinar is being recorded and it will be uploaded on our YouTube channel. Okay. So I will be covering now step by step all these important points. So intraday volatility is important. When you see that price is moving much in a single direction, it means that something is happening. There was maybe a big news, or there was some markup going on, or there is some profit taking. So something is going in the market. Usually fast market movement is caused by, there was some trigger that caused fast market movement, but not necessarily you need to trade it. You always need to be patient and wait for the price to come to you and then pull the trigger. So when you see that market is going up, you don't press automatically buy button, because if you do, the chance is that you probably will end up buying the price too high. Or if the price is dropping, if you put immediately sell, the big chance is that you will be selling at the bottom. You want to avoid it, okay? So intraday volatility fades at the end of the day. So as we already know, during the London and New York session, volatility is at its peak. When the London session closes, okay, it means that European traders are mostly, they took their positions, or they're not actively participating in the market, or they left their positions in the market. So we still have New York session. Usually during New York session, last couple of hours during New York session, you will be seeing that volatility is fading. So it's called EOD, end of day. And it's not a good time to position yourself in the market, okay? It's not a good place to position yourself in the market, okay? So end of day, you don't trade, guys. You don't open any positions. You need to wait to, for me, it's always the best to open a position during either a London session or New York session. Even very, very often, I even avoid trading Tokyo session, because usually during Tokyo session, price makes some, I can say, irrational movements, or at least it's not irrational, but Tokyo session depends a lot on Chinese data, Australian dollar, Japanese yen, New Zealand dollar, all that data, especially from capital markets such as Chinese, and equities such as Nikkei and HSI. Those equities are having a strong intermarket correlation with Forex, and usually the price might move totally different and totally opposite to New York or London session. So I'm usually, and also guys, if you're trading from Europe, it's your sleeping time. So those are sleeping hours. You want to be well slept, and you want to be fully ready for a new trading session. So usually during Tokyo session, I don't open any positions. And it's important for you to understand that intraday volatility will fade at the end of the day. I'm talking about the end of New York session, and usually during the end of London session. So volatility will fade away, except if there was some big news or some important conference that is scheduled, and only then market will wait for the conference or for that news, and then immediately when news goes live, algos will start trading, and you will see that the price is moving. But it's not, again, I'm repeating, it's not ideal time to position yourself in the market. You want to avoid that, guys, okay? Markets are usually ranging in between 7 o'clock and 11 o'clock p.m. GMT. So it's usually a ranging market. The price is going up and down with any clear direction, or if that happens, price cannot break resistance or it cannot break support. So usually markets are ranging between 7 and 11 p.m. GMT. Now I'm talking also about, this is now today it's actually now winter time, so it's 5:14 my time, so it's 4:14 GMT. You need to be well aware that volatility will start to fade away in some 2-hour period. Then whipsaws. Whipsaws are usually when market is moving up and down without any clear direction. You want to stay out of the market which is moving in a whipsaw mode. Okay, you don't want to be caught in a whipsaw, especially if that whipsaw is on higher time frame, such as 4-hour time frame. If you see that market is moving up and down like shark tooth, okay, and then it's a whipsaw, and you want to stay away from it. If you position yourself in a whipsaw market, the chance is that you will end up losing a lot. So you don't want, or whatever, you will be probably losing. So you don't want to position yourself into a whipsaw market. And of course, during intraday trading, you will be spotting a megaphone pattern. Do not trade megaphone pattern. Do not position yourself, guys. It's much better to be to stay out of that market than to position yourself into a megaphone pattern or something that is resembling that megaphone pattern. Okay, you want to actually stay away from that. So this is a bullish megaphone pattern. So price is, it's called also broadening top, guys. Okay, so the price has gone up. Oh, this is megaphone pattern. I'm showing a megaphone pattern now here. This is exactly a megaphone pattern. So you can see it here. The price is making a high, then a low, then a higher high, then a lower low. So a series of higher highs and lower lows will actually make a megaphone pattern. Okay, it will be like a broadening pattern. Okay, like this. I don't know how to trade this, and whenever I try to trade a megaphone pattern, I ended up losing. Okay, so that is something you definitely want to avoid. Okay, it doesn't matter if megaphone is bullish or bearish. You want to avoid trading a megaphone pattern, guys. Also, bearish megaphone, the price was dropping, and suddenly again it appears that it's making a higher highs and lower lows, and again the price is making it's opening its mouth, so it looks like totally indecisive market. It's going in a moment it's going up, then another moment it's dropping. So definitely it's not good to trade. So whenever you spot these guys, whenever you see, yeah, it looks like a reverse pennant, but it's called megaphone. Okay, or broadening top. That is also another name for this pattern. What you should do is do not bother with these guys. Just stay away out of it and do not trade it. You will lose. You believe me, guys. This is something that when traders don't know what this is, they end up losing. Or Ali saying expanding triangle. There are a lot of names for this. Obviously, I learned a megaphone pattern 10 years ago, guys. Okay, so do not bother yourself with fancy names. Expanding triangle, I don't know, broadening top, megaphone, whatever. Just remember, if you see this pattern, chart it on your chart and stay away from it. You don't want to position yourself into a megaphone. Okay. Next thing is this is a shark tooth or EMA spiral. So let's say that we have a EMA indicator and price is making a spiral through it, or even EMAs are making a spiral. Something similar can be spotted. I will try to find it, although it's not very obvious on higher time frames. Usually lower time frames suffer from this spiral. This is EMA spiral here. For example, you want to trade 15-minute time frame, and this is the spiral. You see how these EMAs are actually they're basically it looks like DNA spiral, these EMAs, and actually it's a form of a non-tradable chart, because if you spot this, the chance is that you might end up losing, especially guys if you are caught into this EMA spiral that is going sideways. You want to stay out of it. This is a good example of EMA spiral. EMAs are intermingled, they're mixed, they're intertwined, okay, like a snake, you know, like a esculap stuff, you know, the stuff that is used as a symbol for health and medicine. It's actually a DNA. Those are not snakes. It resembles the DNA, and this is similar, okay? If you see this horizontal spiral that is resembling like a DNA spiral or intertwined EMAs, you want to stay out of these guys, especially if you trade a system that is giving you a crossover entries. You will end up losing. One of the reasons why I'm not doing crossover entries anymore is definitely this spiral. I want to avoid it as soon as I see it, and luckily enough, I don't trade 15-minute time frame except if I make some counter or if I make some swing scalp. My trading is done on 1 hour and mostly 4 hour time frame. It depends. For 4 hour, it's my Camarilla MACD light, a swing, or if it's 1 hour, it's counter trend or trend. So basically, I'm not going lower. It's dangerous. I mean, I have also used and I've been using scalping from time to time, but I do that on 5-minute time frame, and I don't use any EMAs. So guys, if you use EMAs, if you use any types of moving averages, have in mind that this spiral is something that you definitely want to avoid. You don't want to be caught into a EMA spiral. Okay, now guys, next thing is actually normal trading hours of major and minor forex trading centers. As I said, I don't want to position myself during Auckland or Wellington session. I definitely want to avoid this session, guys. Usually, when I trade and how I teach people to trade is trade during, you can try to trade during Frankfurt Open, London, New York, of course, Chicago, and this is San Francisco, Los Angeles. That is US session. So European session, US session is okay. If you want to go after the midnight, like a midnight mode trading, then you wait for a Tokyo session, guys. I don't trade Auckland, really. I don't trade Sydney. I only might make a trade during Tokyo. But normally I don't make any trades because I need to sleep and I get up early. So I need to be ready for London session. So that is why I don't trade during Sydney session, but during Tokyo session. But maybe some of you, of course, a lot of traders are actually trading from Australia, New Zealand, Canada, US. You can trade Sydney, but I'm telling you again, and you already know this, much better session to trade is London and new US session. Okay, those are best sessions. And of course, definitely pay attention to the time, because your local time corresponds to the session, and platform time actually corresponds to a candle time and the server time where your orders are executed. So let's say that you are trading from Europe and you want to trade, for example, during Tokyo session. Check your local time, check the GMT time, see when the Tokyo session starts, and then if you want to wait for it, then do it. Usually it starts around 2 a.m. GMT time, but you can always check Forex Market Hours website, and there you will see which time you should trade if you actually want to trade Tokyo session. Also, what is important is to identify your position, guys. This is definitely something, I'm calling it food for thought. This happened with Bitcoin, and I was warning a lot of times, guys. I was warning many investors and traders that this hype will soon be over. And I was warning them when the Bitcoin was around 20,000 euros. And this is now what happened. You already know that Bitcoin now went under 5,000. If this continues, Bitcoin will go to 1,500, 2,000, and I guess that a lot of investors will pull out of that. Maybe there will be one more leg to the upside, but it will lose its value a lot. It's normal. I was warning about it. Now I'm really feeling sorry for people, traders, and general public who didn't listen to what I had to say, and they ended up probably in huge losses. It's normal, guys. That is the market. This is the market phase. It doesn't matter. Call it crypto, call it whatever you like. This is market phase, and it has existed since the beginning of time. So it's the same, whether it's a Forex or currency or equity or index or whatever, Bitcoin or cryptocurrency. It's always the same. Smart money will always take off first. Okay, it's a stealth phase. We don't see that, guys. You cannot position yourself definitely during the stealth phase because it's a smart money. Institutional investors are usually going here. If the price is going to go up, investors are joining there. So investors are joining a little bit later, of course, after the smart money. So they're joining at the first leg here. First sell-off, you see, and then the price is going. When public joins, guys, everything is too late. Okay, now I'm talking again about the blockchain system and this growth. And I said growth demands a temporary surrender of security. Whatever is going up needs to fall down, but whatever is going up in a huge extent, you know that something is wrong, and that is a temporary surrender of security. This is when public joins up. Mania phase, mania attention, enthusiasm, denial, greed, delusion, and then back. Market is dropping, okay? And usually, guys, when you join like a retail or newbie trader, you will end up in a wrong side at the wrong side of the market, and you will start to lose your hard-earned money. So have in mind that when something is so excessively promoted in public, it's already well known. Especially, I'm talking about these cryptocurrencies now. The best time to join was during this first sell-off, when institutional investors joined, or at least here when some retail traders joined. But when public started to talk about it, everything was too late, and you don't position yourself, guys, in the market. Never, ever, you don't buy, you don't sell anything when price is very wild, when public is talking about it. You need to wait for the first leg down, then you know that something is returning to normal. And if you want to sell it, then sell it from here, guys. You don't go long, you're actually selling. When something goes too much to the upside, it needs to drop heavily, and I was warning about it. So for all of you who are trading cryptocurrencies, guys, I'm very sorry if you had a loss, but it was expected. By all means, it was expected, because something that goes excessively up without any base for that, it's, as Robin is saying, easy come, easy go. We traders know that. And I also have a trader who lives in the US, and he was calling me to buy a Bitcoin when the Bitcoin was around $14,000. And I said, okay, my friend, don't do that. It's better to sell than to buy. And he said, no, you will see, it will go to 14,000 euros. And I said, there is no way that it will go to 14,000, 40,000 without a retracement. And he asked me, what the hell is retracement? So, guys, that is a guy who never ever traded anything. He was here. I mean, you know, media intention, enthusiasm, public. When public started to talk about it, he joined, and millions of others joined. It was too late. What happened? Price went to 20K, bang. It went down. Now, 1.5, probably 2, my opinion. But that is a story for another time. Just want to tell you guys, you don't position yourself in the market when there is a big hype about any product, about something that is everyone is talking. Let's say that everyone is talking the dollar yen will go up. For example, everyone is talking the dollar yen will go up. And what? You should go long because everyone is talking the dollar will appreciate it versus yen. No. When public starts to talk about it, it's already too late. Probably the market was already priced in that potential spike, and smart money will actually pull out of the market, leaving you retail traders to suffer from a drawdown. Simple as that. Hype. Something is hyped, stay away from it, okay? Stay away. This is a scholastic example of a Bitcoin and something that has been happening. Yeah, Ali, he's saying dollar yen example was 2 years ago when people talking it dropping below 100,000. Yeah, of course it recovered because 0 guys, 50s, 20s are natural support resistance levels, especially 0 round numbers and rounded numbers such as 50. Those are natural support resistance levels. And banks, trade from those levels. Banks are not very interested to trade exactly at the price like 100.07. No, guys, it's 100 for them. So that's normal. It recovered from 99.8, and you see now I don't see it coming to 100 anytime soon. So that is what I'm saying. When public is talking about something, you know that something is wrong, and you don't want to position yourself as everyone is doing. You want to do your own stuff, do your own analysis. When you see that something started a move, wait for the first leg versus swing, and then join. It's better to join a little bit later, but at the right side of the market. Then join when everyone is talking about it and be on the wrong side of the market. That's very important, guys. Also, best time for buying, guys, and best time for selling, and best time to stay out of it. This is basics of economy, guys. Market cycles. Okay. Stage 1 is called accumulation. Stage 2 is called uptrend or markup. Stage 3 is distribution. Stage 4 is downtrend or markdown. Whenever is accumulating, you can position yourself having in mind that all what we have been talking about should be respected. No trading during bank holidays. No trading during New Year. No trading during EMAs or Ema spirals. No trading during hype. No trading when you want to go to sleep. So you need to respect it. No trading when the price is making a whipsaw or big volatility in both directions. Megaphone patterns. If accumulation is normal, if you see that price is moving and it's at support, then you buy it. When it comes to distribution, you don't add, you pull out of the market and wait for a retracement. That first retracement will be a counter trend trade possibility. Today, in our Telegram channel group, we had a great trade, Euro, Australian dollar. I made 50 pips, guys, and that was an example, a scholastic example of counter trend trade. You can also read on ElliotteCurrency.com my analysis, and on Forex Street. Also, I published the analysis for Euro, Australian dollar today, and it gave us 50 nice pips, guys. At least for me. For some traders, I think it was more because I protected my profits and I took only 50, but then it dropped hitting target or very close to target. So that is what I'm saying. You don't position yourself here. You're pulling yourself out of buy trades. And when market starts to go down, you need to do technical analysis. We'll be talking about fundamental analysis next class. And after that class, we will be talking about technical analysis. Then you use technical tools to position yourself for a markdown or retracement. Or when retracement goes too much, then it becomes reversal, okay? And then you can add to existing positions. But have in mind that during the accumulation phase at support, you want to go long. When market is pulling out, you pull out your profits. And when it's at the top, you want to go counter trend. Okay, I'm talking about trend as it's always trend is your best friend. When market is going up, wait for the pullback and then go up, or trade that retracement and go up. It's always 4 stages: accumulation, uptrend, distributions, markdown. Then it goes again up, down, up, down, up, down. It's market cycle, guys. So think about this. This is very important. Best times for buying is, at least if you can get up, and if you can position yourself during the accumulation phase, is the best. But if you are not fast enough, then you use lower time frames. And when price starts to move, watch lower time frames and try to get into the same day on some trend, whatever. When price gets to its extremes, you sell. Yes, Robin, counter trend on 1 hour is usually within the trend on 4 hour. That is why I'm doing weekly, daily, 4-hour analysis. Or if I want to trade intraday, I do daily, 4 hour and 1 hour. Okay. For my swing method, Camarilla McDelight, it's weekly, daily 4 hour, weekly for trend, daily for retracement, 4 hour for entries. On intraday systems, daily for trend, 4 hour for retracement, 1 hour for entry. And that is what I usually do. So it's important, guys. We will be talking also about it, that multiple time frame analysis. That is, you need to decide whether you want to trade during the day or you want to be an investor, to leave your trade. For investors, this is not extremely important, really. But for traders, guys, who trade on 1 hour and 4 hour time frames, this is extremely important. So be careful and watch for this. Okay, and finally, guys, late Friday trading. If you have now any questions, you can start to ask, because this is my last slide that I prepared. London profit taking noon. Usually during London noon, price will pull. Okay, if the price was going prior to London noon up, then when around the London noon, it will start to drop because investors are pulling their profits. They are exiting the market. Each close of a buy position is automatic sell into the market, and price starts to drop. Have in mind that, guys, think about it. During London noon, price will usually go in the opposite direction. And just before Wall Street traders join, the trend will also establish itself again, usually. So if you're in the market and you're trading intraday, think about it. It's important. London profit taking noon will usually probably will make your profits less, because investors, if you're at the correct side of the market, investors usually pull some of their positions and use the price starts to pull back. So protect your profits. It's important. Late profit taking also, guys. Usually at the end of each major session, there is profit taking, because some traders are actually trading on time-based principles. And when the last candle is about to close at the top of the hour, we talked about TOTH, top of the hour, watch previous lessons, then late profit taking will take place. Usually 5 minutes before the close, you will see a big volatility, and that is the time when majority of investors will start to take profits, and then the price will go in the opposite direction. End of day trades at the end of each major session. Also, guys, at the end of the day, before, let's say 10, 11, before the midnight, price will literally not move. You don't want to position yourself. End of day trades can only be made in a counter trend mode, in my opinion, at the end of London session or at the end of New York session. Maybe even better at the end of New York session. That is the time when maybe some counter trend scalps will kick in, but do not position yourself like you want to go a full day or a full swing position. You don't do that. You just can scalp a little bit during end of day, but not position yourself. Now Ali is asking, is it between 12 GMT and 13 GMT every weekday London noon? No, it's now around 11 a.m. GMT and 12. You will see between 11 and 12, price will start to change the direction. There is no clear time like each time the same minute. It's in between now 11 and 1 a.m. GMT. Every day, guys, London profit taking happens every day. So just watch what price is doing during that time, and you will see. So watch for around London noon time. If you're not sure, just type the GMT time, and I think London now is GMT time, right? So that will be something around noon. During Friday also, profit taking will take place, and each Friday price will go up and down, sometimes even for the whole day, because also investors don't want to carry the risk over the weekend, and they are pulling their positions out of the market. They want to protect their profits. Remember, guys, reversals always go after retracement. Retracement precedes reversals. Reversals are just they always happen after retracement, and they are just a good signal that trend is going to reverse in the opposite direction. If a reversal is taking place on Friday, be ready to have a clear mind and think what I have to say, because Friday is not a day to take serious look at, because usually during Friday the price might drop, and after Monday price will rise. A lot of traders ask me, why is it happening? That is what I'm saying. During Friday, all those long traders who went long during the trend will pull the money out of the markets. They will actually close their positions. Price will start to drop, and you might think, okay, this is reversal. No, guys, it's not reversal. Do not watch Friday for reversals. Friday is not good for reversals. If there is a reversal, it should happen before Friday. And you need to distinguish. Retracement is a trend move. It happens in a trend. Reversal is a change of trend. And carry over risks. If you don't want to carry over risk during the weekend, guys, you don't position yourself in the market during Friday. You might make some scalp trades, or if you want to position, like have a positional trade, a swing trade, then you can do it. But have in mind, intraday traders, they never position themselves after, let's say, 3 o'clock p.m. GMT on Fridays, except if you want to scalp or something. But for positional trades, it's a big no-no. So guys, I hope that you enjoyed the webinar. If you have anything to ask, just go ahead and ask me. This webinar is being recorded and it will be uploaded on our YouTube channel. I hope that you are enjoying it. Next week is fundamental analysis. Then we go to technical analysis. And of course, we start with indicators and trading methods for our price action training school. Thank you guys for listening. I will be here very soon with you. Have a great trading week and enjoy. Trade safe. Talk to you soon.